Hi, everybody. I'm Dave Rich.
And I'm Tatiana Hodges. And welcome to the Pivot Podcast.
Thanks for being here.
Thank you so much for tuning in, y'all. We have so much going on right now that we just can't wait to discuss with you all today.
Well, I know you got a lot going on in that real estate world.
Oh, my goodness. There's so much going on.
What do you think about all this going on in the real estate market right now? Some of the administration stuff.
I mean, it's just a lot of uncertainty that we're all seeing, right? I mean, and I know on the last show we talked about confidence. Mm-hmm. And it's really like a lack of confidence now due to individuals being laid off, furloughed, and let go. And it's just, the job market in itself is tough. They're putting people through 1, 2, 3, 4, 5 rounds of interviews nowadays. And so it's tough getting a job, tough keeping a job. And it's just a lot happening. Rates are...
Yeah, I read somewhere that there were like almost 400,000 assisted black women that were let go from the federal government.
Oh, yeah, I saw that too.
Wow, can you imagine that?
Cannot imagine. On top of that, paying a mortgage, taking care of your other bills as well, and just maintaining a life.
Well, they got this thing where they're proposing now that you have the ability to take your mortgage somewhere else. So if you got a really good mortgage rate, you can make that mortgage rate transferable to your next purchase.
Oh, yeah, I've seen that as well. I've seen that.
You think that's a good thing?
I mean, I think that it sounds like a good thing for people to keep their lower interest rate and move on to the next home. I mean, they're finding ways or trying to get creative in making the market move again, just as we've seen that 50-year mortgage thing going on.
But yeah, that's pretty deep. 50-year mortgage. 50-year mortgage, you won't get it paid off, your kids won't get it paid off, your kids won't get it paid off. I mean, I don't know. Now, of course, if you're very disciplined, you can double up on your payments.
Yeah, I mean, I'm not opposed to different options, right? I mean, it's just that you have to be strategic with those options.
Right.
I mean, you can't take out a 50-year mortgage and pay the minimum mortgage payment every month and think, you're going to grow equity similar to a 30-year mortgage. I mean, you just can't think of it that way.
No, even with a 30-year mortgage, I think the first 10 years is all dedicated to interest payments. There is no equity reduction.
Yeah. I mean, it's a lot going on, honestly. I mean, 50-year, I don't know. I guess we'll see how it goes if this is something that they plan to really put out there to the market. Yeah. Is it something that you would ever?
I would not. I would not. I would not do a 50-year mortgage. Just the thought of a 50-year mortgage gives me the
Sounds
blues.
daunting a little bit, right?
I mean, come on, 50
years.
So if you're 40 years old and you're buying your first home with a 50-year mortgage, the projection is you don't pay that mortgage off for 50 years, you'll be 90 years old.
Yes, you will.
Now, if you decide to sell it before you've acquired any equity, you can end up coming to the table at the point where you're getting a loan, and you're going to have to pay somebody to buy that property from you.
Yeah, it's a lot going on. It's too much. And I did want to mention something else about that as far as them trying to get the market up and moving again. Have you heard about the Fannie Mae thing with the credit score? They lowered the requirements for FHA homebuyers. Yeah, I believe it used to be about 620 and now it's about a 580 to purchase a home. Or to at least get the process started. I think that's good right there because credit is huge, and that's something we'll talk about later. But it's a lot going on.
It is a lot going on. But actually, we want to talk a little bit about some of the things that probably we should know before buying a house that nobody tells us about. So what we have for you today is the 10 things that new homeowners probably should know before they purchase a home that nobody tells them about.
That no one talks about, right? And so we're here to go ahead and just go all in and tell you about these 10 things so that you're better prepared moving forward. All right? Because buying a home is one of the biggest decisions most people ever make. But the real truth is that most of us walk into it blind.
Well, that's correct. I mean, the industry is full of information, but not all of it is shared. And some of the most important things, the things that cost you money and time and peace of mind, they actually never make it into the brochures.
They don't. So today we are going to break down the 10 real estate truths that most buyers have ever heard and the most homeowners wish they knew sooner.
And if you're thinking about buying or refinancing or upgrading or simply staying put, well, this is the episode for you.
This is for you.
So everyone worries about credit lenders, how credit lenders obsess over your credit score and that kind of thing. But the thing that they pay the most attention to in general, even beyond the credit score, is your debt to income ratio. You can have a 780 credit score and still be denied by the lender as a result of it. So this is the one of the biggest truths that we are going to talk about right now, is that your credit score is not the biggest factor. Your debt to income ratio is.
Absolutely. Debt to income ratio is a silent deal breaker. Keep it under 36% for the best rates.
So why would you think that they targeted 36%?
Honestly, I don't know, but I mean, that's the sweet spot right there. I work with many lenders and they've said this as well. You just want to make sure that, and I know this from just experience, me being a real estate agent, I've worked with clients who have had a 700, 730, 750, but their debt to income ratio was too high. And that completely changes the game. You know, I don't know why they chose that sweet spot, but you know, it is what it is. You really got to keep your debt low.
Well, you know, from a lender's perspective, they're kind of betting on you, right? When they lend you money.
Oh, absolutely.
So they're looking at that the income ratio to determine whether or not you're going to be able to maintain that monthly payment.
Absolutely. Lenders are banking on you paying them back.
Yes.
That's literally what it is, right? Yeah. So I mean, I definitely understand why. Because I mean, if your debt is too high, it's like, how much more can you take?
Well, that's true. Yeah. So where's your cash flow? If you're spending all your money on the mortgage, at some point there's going to be something else obligating you to spend.
Absolutely.
And that puts that mortgage monthly payment in jeopardy. So I think that's kind of where they're coming from.
Oh yeah, for sure.
Now the 36%, I don't know how they factored that in, but the people way smarter than me that probably did some calculations on why that's important.
Absolutely.
So credit opens the door, but the debt to income ratio generally determines whether you walk through that door.
Absolutely. Yes, it does.
And there's the truth number 2, which is a pre-approval is not a final approval.
Oh yeah, no, not at all. A pre-approval is just a snapshot and not a promise. One credit pool, just one job switch, one large purchase, and that approval can disappear just like that.
Yeah, I've seen it happen.
Oh, yeah.
Everything falls apart at closing because of it. You think you got everything done. You're looking forward to it. You spend weeks submitting paperwork and everything. You're at the closing table, and all of a sudden, boom.
All of a sudden, boom. Someone then went out and got that Lamborghini before they got the keys to their house.
That's right.
And now it's all over. You may get the Lamborghini, but you have nowhere to park the Lamborghini.
And it doesn't even have to be a Lamborghini.
It could be anything.
Yeah, you may have just opened up another credit card.
It could be something as small as opening up a credit line, purchasing an engagement ring, anything that requires a credit pool or something new that you financed, even if you think it's minimal, can be drastic to you buying that home.
And I want to say that what we're talking about here is not legal advice. We are not experts.
We are not.
But we're just sharing with you what we have learned and experienced in our own personal lives.
Absolutely.
And those around us.
Absolutely. I have seen, as a real estate agent, deals fall apart at settlement because someone decided to finance something. And just because they thought it was small, they thought it was okay, and it wasn't.
And I've purchased properties where when I purchased the property at closing, the seller actually had to write me a check because they were upside down.
See? So, there you go. It happens all the time. So you really have to be aware of this moving forward. And I also wanted to mention, as far as pre-approval, when you are getting pre-approved, something that some people may not tell you is that you want to get an official pre-approval letter. You don't want to get pre-qualified. Please don't go online with these lending companies and these major companies just putting in your name, phone number, address, and think you're pre-approved to buy a house. They're not thoroughly looking into your debt to income. They're not pulling your credit. They don't know anything that's going on behind closed doors with your finances. So you want to make sure that you are getting pre pre-approved and that your pre-approval application is going through something called a desktop underwriting.
Okay.
So it's basically a premature underwriting process to make sure that you are pre-approved to purchase this property.
Okay. All right. Well, that's good to know.
Mm-hmm.
Yeah,
For sure.
Pre-approval, yeah. Nothing's final until the loan is funded.
Oh, yeah.
So that's and the loan's not funded until you've gone through closing.
Yeah, exactly. You receive that letter, that final approval. You are approved. You're good to go to closing, and you got your home. So you really got to be cautious moving forward with that. So let's talk about truth number 3. Homeowners insurance can dramatically change your budget.
Yeah, how about that? People shop for homes, but almost no one shops for insurance.
Mm-hmm. That's true. And in high-risk areas or flood zones or homes with older roofs, insurance can double overnight.
Yeah, well, the key takeaway there is insurance quote before you fall in love with the property, because it can make a big difference.
Oh, yes, it can. That can stop you from moving to a different zip code or whatever the case may be, or, crime rates can also affect the homeowners. Like you said, the roof, everything, natural disasters in that specific area. I mean, all of that can really tie into how much you'll be paying in homeowners insurance. And just like car insurance, you need this before you officially own the home. I mean, they need to make sure that the home is going to be protected, and you have to make sure that you have that before so.
Yeah, and there are ways for you to determine the risk, the insurance risk, in the location where you're looking to buy the home. There are places where you can actually go and it'll designate low risk, high risk for flood, fire, things of that nature. And you should know that before you make that purchase, because it can have a direct impact on your monthly or annual insurance costs.
Oh, yes, absolutely. So that's definitely something to look into as well. Another thing that we want to discuss is the seller disclosure is not a full confession.
That's right. Just because the seller is disclosing something doesn't mean you've got all the information that you need to make that purchase.
Absolutely not. Absolutely not. And this is something that I discuss during my consultations with my clients who are looking to buy either a pre-existing home or a new construction home, right? Sellers, they may not necessarily know what's going on behind their walls, right? It's up to you to make sure that you're buying a home that's in good standing, and that's why I highly, highly, highly encourage a home inspection.
Yeah, because, people think that the law requires that the sellers disclose information that they know, but it may be information that they don't know, that they don't disclose. And that's where the independent inspection comes in.
Absolutely. Absolutely. And I want to say again, too, I work with clients who, just because they're buying a new construction home, they think, well, I'm buying a brand new home, newly built. My home has gone through several inspections. I don't need to pay $400 for this home inspection, but you do. I have a client right now who will be settling this month on a brand new home, right? And they found out that there's some HVAC issues.
Wow.
And it's because we ordered that home inspection. And what did they do? They fixed it. So.
Well, I've had an experience. I bought a single family home that was rehabbed, and I did a basic inspection, but my inspection clearly wasn't good enough, because when our tenants moved in, and this was an investment property, come to find out that initially it was a 1-bathroom structure that they had turned into a 2-bathroom structure, but they didn't do the piping correctly, so that the second bathroom had water pressure issues. In order to resolve that, we had to dig up the concrete floor and replace the piping, which was a serious expense.
Oh my God, I can only imagine. It sounds expensive.
Now, had I done the proper inspection prior to purchasing, I could have probably uncovered that and got a concession if I decided to go forward with the purchase from the seller as a result, because of that increased cost.
There you go.
Case in point.
Case in point. So the takeaway here is that you always should order an independent home inspection.
Yes. From an inspection group of quality and integrity.
Licensed.
Yes. You don't want to get Well, I won't say that.
Well, I will say it. Listen, do not call your uncle who has been inspecting his own home for the past 20 years thinking he can inspect yours and give you professional feedback on what needs to be done. Hire a professional home inspector, licensed, and I actually have quite a few home inspectors myself that I can, send over if you are interested.
All right.
Yes.
So the other thing, truth number 5, people don't think about this, but almost everything is negotiable, including your interest rate. You can negotiate closing costs and repairs and appliances and interest rates and points during the entire purchasing process.
Yes, you can, but most home buyers believe everything is fixed, and it's not. Lenders and sellers and agents all have flexibility to negotiate.
Mm-hmm. So everything is negotiable when you know what to ask for.
Yes, and that's the key point right there. What you just said is knowing what to ask for and also when to ask for it. Mm-hmm. Everything, like you said, can be negotiable. I've negotiated $20,000, $30,000 off clients' homes, brand new builds, right? And why were we able to do this? Simply because we knew when to ask. Right? If the home is sitting on the market over 60 to 100 days, you think the seller or the builder is not ready to sell that home? They're more than ready to sell that home. They're ready to get it off their hands, right? So there you have it, negotiation strategy. When it comes down to your interest rate, that can be negotiated. You can buy down points if needed as well to lower that rate. But everything can be discussed. Builders are now offering interest rate incentives as well. They're getting people in at around a 5.99% is usually what I see for new builds. Some in southern areas like Georgia, Florida, they're offering rates as low as about a 3.99%. But you got to keep in mind that here's the caveat. They want you to use their lender. Okay. Their preferred lender. Yeah, that's usually how that works with them.
So if you were going to list a pro and a con on buying an existing versus a new build, what would you list out as the most important?
What would I recommend? Always a new build.
And why a new build? Why is that the most beneficial?
It's new. You're buying a brand new home. Most people get to design it themselves. They get to choose their lot, their finishes, their floor plans, elevation. They're the designer behind that home that they'll be living in for several years.
Isn't there some additional expenses involved there?
As far as additional expenses, not really. Buying a new home is more energy efficient as well. So you're saving money with that. As far as more money, hey, I see it as saving, because if you buy a brand new home as opposed to a pre-existing one, you're going to find yourself putting more money into the pre-existing home due to renovations that you're going to have to make later on down the line.
You think so?
Or you need a new roof maybe new plumbing, heating, cooling. You're going to find yourself coming out of pocket making those changes anyways in the next 5 to 7 years on an older home, as opposed to going new with warranties and different things like that to protect your home.
But what about the caveat that the older home's structure is more solid than the new fabrications that they have nowadays?
Honestly, I wouldn't even say it's more solid. I haven't heard that yet. I honestly haven't. It's just so much more technology now in building these newer homes. And out of my experience, I haven't heard any horror stories from my clients who have bought a home and they had foundation issues or something like that took place. And I've been licensed for 8 years. Okay. So I haven't seen it yet. And hopefully we don't, but that's why it ties back into getting that home inspected, right? So the takeaway here, though, is that everything can be negotiated. And it's all about when you ask, how you ask, and having a good team in place to help you with those negotiations.
Oh, yeah, that team is important.
Team is very important. All right, and so now we're going to talk about truth number 6. There are over 200 down payment programs that most buyers never even hear about. And there are state programs and city grants and nonprofit funds and employer credits and federal programs as well.
Yeah, and the truth of it is that many of these programs can be combined. But real estate agents don't always mention them because they can slow down the deal process, and they're trying to move toward getting to closing.
Yeah, and I agree with you on that. It's unfortunate, choosing an agent who is going to give you the knowledge you need and the confidence you need to move forward is always key. Yes, people think that some real estate agents are all about a quick sale, but there are agents who truly care about you getting what you need to close and receiving that down payment assistance needed to get to the closing table. And good agents have their own list of preferred lenders who offer these programs to make that happen.
Yeah, key is you might qualify for free money and nobody will tell you if you don't have the right team in place, right?
Exactly.
So you kind of have to do your own research unless that team is with you and they're doing that research for you.
Absolutely. So always ask your agent, if you're working with one, what programs are available for you to take advantage of right now.
Good advice. I like the way you think.
Oh, yeah.
So number 7, your interest rate comes from the market and not the bank. So all lenders pull interest rates from the same mortgage-backed securities market.
Oh, yeah. So do not waste your time believing that one bank has a magical rate. What they can change are the fees.
Yeah, so you could have one bank that tells you that they can give you a certain interest rate up front. For example, you could do a credit pull from some of these online credit reporting applications, only to find out you'll get a projected interest rate, but then when you actually do the application, it could change because the lender now is in earnest considering lending you that money. And they're not using the same criteria in that application that they are going to use to actually make the loan to you. So a lot of people don't know that that credit pull, that kind of commercial credit pull that you get, is not the absolute bottom line of that credit score projection. It's more commercial. But when the lenders actually do an evaluation and underwriting to give you that loan, they're checking different criteria.
Oh, yeah, for sure. And back to shopping, or just, getting this information, I always tell my clients it's best to get to shop at least 2 lenders before they make a decision on who they would like to work with. That pre-approval letter will last you about 90 days. And typically when you get your credit pull the first time for a mortgage, it's a soft pull the first go around. The second, third time is usually just a soft pull. But that time gives you the chance to really shop different fees and see like which works best for you before you decide to choose that particular lender.
Yeah, I wonder about that because in the car industry, when you're selling cars and you apply to different dealerships to purchase a vehicle, it's kind of collapsed into one credit pull. So you don't take, like if they shop you to several different lenders, since the industry knows you're in the mode of shopping for a vehicle, it doesn't put you in a position where every inquiry is a pull against your credit, reducing your credit each time. That's not what's happening. So they know that you're in the process of trying to purchase a home, so they give you some time factor.
Yep.
And it's just that single pull.
Yep.
Is that the same in the mortgage?
I would say it's similar, yes, for sure. It's just it's not going to happen all at once. It's if you want to shop a different lender, they know already based on your information, your credit, all that stuff that you've previously applied for a home loan. So they're not going to give you another hard pull again in that window of 90 days.
90 days. Okay. Because I think it's 14 days for the car industry.
Oh, yeah.
Yeah, within that 14-day time frame. But don't hold me to that, folks. It's just something I've read.
Okay. Yeah, I would say it's similar. All right, so truth number 8, your home appraisal is an opinion and not a fact. Appraisals vary based on Appraisals vary based on the person completing them and the comparable properties chosen, and even on the day they do the work.
Yes, and appraisal bias has absolutely been proven to affect Black neighborhoods and homeowners.
Yeah, I can agree. We've seen this. There was a major lawsuit recently regarding that a few years ago.
Yeah, and unfortunately, as we stand today, they're chipping away at your ability to hold these people accountable.
That's a big one right there.
Yeah, I remember years ago I was, and I don't know if I should share this online, but I'm going to because I like to be transparent. So I worked for the Obama administration as someone who was helping him get elected.
Okay.
And when he was elected the second time, I remember being at a lounge, and it came on TV he had won. And I looked at the guy next to me. I said, "Wow, I'm sure happy that happened." And he looked at me with a straight face and he said, "So what? Not going to change anybody's life." And I didn't respond to that, but I've thought about that ever since. And look at us now. Elections have consequences. And that's what we're dealing with at this point here with this current regime. You really do need to participate in a participating democracy. If we truly want to manage ourselves in this government structure, we have to be participants in the government structure. And a lot of people just kind of say, "Well, I don't like politics, it don't matter." Well, it actually does matter a lot. You local politics, if you're a homeowner, if you get a homeowners association that's draconian, they can make your life miserable. If you don't vote somebody in a local government who cares about picking up the trash in your neighborhood, guess what? The trash in your neighborhood doesn't get picked up. This is all politics.
Yeah.
Anyway.
I agree. I agree with you.
Segued away.
I agree. But no, back to, I agree with you. And back to the whole, appraisal thing. This all matters, right? I mean, this all matters. And just as you said, I mean, this is literally called a professional opinion about your home. And it can vary. It can vary. I mean, I actually know agents who, and I've done this myself, attend the appraisal appointment, right? To provide comps to give to that appraiser.
Wow.
To make sure they have their stuff in order, right? Before they give an appraisal for the property. Because what some people don't know is that any buyer who's FHA approved, that appraisal is going to stick with that property for 120 days. That's just how that works. So you want to make sure that the appraisal is a good appraisal. But again, it's just a professional opinion. And let's just say this. What if the appraiser's new and has no idea what he's doing? That all factors in, right? The weather, just anything in general, right? Not having enough comps, having too many comps. So it's just the appraisal is really important. And the takeaway here is you can challenge low appraisals and provide your own comparable properties.
Okay. I guess the key to appraisal is to make sure that your appraiser is appraising like structures within a specific geographic location.
Absolutely.
Because the broader that location, the less likely they're going to have a really good appraisal. You want a tightly coupled geographic location that is actually replicating the comparables to what you're purchasing.
Absolutely.
If it deviates significantly, that appraisal is probably going to be wrong.
Absolutely. I agree.
Truth number 9, the first mortgage you get is rarely the mortgage you'll keep. So you're not